Hello, everyone. My name is Martin Barth, and I'm the CEO and co-founder of EcoLigo. And I'd like to present to you my business and what we do to close the finance gap for solar projects in developing countries. And I would like to start with the background as to why we actually started with this idea. So 10 years ago was the first time when I came to Africa. And having worked in solar projects in Germany before, I was really excited about Africa. I thought, finally, I'm in a place where solar irradiation is much higher than in Germany, where energy cost for businesses is really high, and where solar energy makes much more sense and I can realize many more projects. That was what I thought. 5 years later, I had exactly realized 0 projects. And I was at a solar conference in Nairobi, and I met my now co-founder Marcus, and we were discussing this, and we were discussing why solar projects in Africa had not been implemented, although the economic situation was actually really viable for such projects, specifically with cost for solar also going down on average by around 20% year on year. So it turns out that my co-founder Marcus back then was working for GIZ, the German Development Corporation, and had worked on new market models for renewable energy companies all across Africa, looking at how to realize biogas, wind, and solar projects. And we realized in all those segments, people were having the same problems that I was experiencing when it comes to solar project development. And there were some key issues that we identified as to why not many solar projects were realized in those countries. So first of all, commercial and industrial businesses really want to focus on their core business. Anyone who has done business in a developing country knows how difficult it is, and any distraction from the core business is not seen as something they want to take on. So really, decision makers and management had no interest in solar because they knew it was another item on their list to take care of. Secondly, for everyone who has been in a developing country and has visited a project that may have been funded by a donor agency or an NGO, has experienced that after a year or 2 in operation, these projects typically stall. There is a defect, maybe even just a minor spare part that is not available anymore, and therefore the project in a total does not work and operate anymore, not generating any benefits. So there's a lack of continuous support of this project. And last but not least, and this is the most important factor, businesses in these countries, when they have money available, they invest it into their core business. They do not invest in infrastructure. In addition to that, there is what we call the finance gap. When I'm a business owner in Germany, I want to finance a large investment project for my business. I provide some equity, and the rest I finance with a bank, right? So I go to my house bank and I get a loan specifically for whatever I'm trying to finance, whether it's a building, a machine, or even just working capital for an expansion of my business. Now, in developing countries, the banking and financial markets are not working that well. So basically, even if you have the equity to finance such a project, you don't have access to the debt. And that is based on 2 market situations that, as a business owner, you cannot change. First of all, local banks provide only very short tenor loans. So typically we're talking here 18 months to a maximum of 36 months. Secondly, because of the high interest rates of the central banks in those countries, the on-lending banks are providing businesses with interest rates of 25 to 35% per year. So we have small amounts of money that I could lend as a business, but I have high interest rates and short tenors that do not match the finance of a solar asset. And then we thought in my last business that we talked to developing banks like the KfW or DEG and get finance from them. But unfortunately, like with many of the big players in the market, they're only interested to provide debt in large volumes. So the smallest volume we can get from a DEG, for example, is 3 million euro. Whereas most projects for commercial and industrial clients are maximum 1.5 to 2 million of investment. So the debt tranche is maybe 70% of that. So really, in all developing markets, there's a finance gap, and it's between around 50,000 euros to around 2.5, 3 million when the larger banks become interested. And that is really hindering businesses to take on solar projects and to get finance for it. So that's what we do with EcoLigo. We finance these projects. And not only do we finance them, we provide the commercial and industrial clients with a solar as a service. So that includes operation and maintenance to make sure the project does last the 20 years of the lifetime. It also includes an insurance of the asset. And basically, we're providing them with energy at a lower cost, allowing them to save around 40 to 60% of their energy expenses while making a transition to a carbon emission-free generation. Now, what we do to actually make this work is the key to our business model. We basically finance every single project by project, on our own crowd investing platform, EcoLigo.investments. So we're providing these projects to private investors in Germany and later this year also all across Europe for them to make a personal contribution to a carbon-free world where they can support tangible projects with small amounts that we collect until we have the larger investment volume. So typically on our platform, people invest between 500 and 10,000 euro per project. On average, we're actually talking 2,500 euro, and they get an interest rate per year of around 4 to 7.5% depending on the project. So much more attractive than having your money on a savings account or in a standard fund that you could get with your bank. Moreover, we provide them with regular updates of the projects, showcasing them what their money is actually working for and what benefit it is providing for businesses in these markets. And because we have access to these large group of crowd investors that finance every one of our projects with small investments, we have multiple benefits. Our crowd investors, because they put money in every project, automatically get a diversified and risk-reduced portfolio. Secondly, what is different on our platform than on other platforms, you may have heard BetterVest this morning, is that we actually own the asset. So we have a self-interest that the asset is operating well and generating savings for the client so that he pays his lease payments for the asset and we can generate the return for the investors. Now, a lot of people ask me, okay, if you're doing business in a developing country, there must be a lot of risks involved. And certainly there are some risks, but we can mitigate them quite early in the process. So what we do when we talk to clients in these markets is that we actually look at them quite thoroughly. We look at their last financial statements and have developed an automated algorithm that gives us a risk score for every client. For example, Unilever, as a client, of course, has a much lower risk score than a locus office building that is maybe established 3-4 years ago and is run privately. But we provide that risk factor to our crowd investors. In addition, we work together with Allianz Climate Solutions, who performs an external due diligence, technically as well as financially, on our projects. So there again, we're trying to minimize the risk by showcasing what reserves in terms of cash a project is generating and how risky it may be that a project is defaulting. We're also active in markets where if a client goes bankrupt, we have fallback options. For example, we can always sell the solar electricity into the national grid and still make a return on a project, although maybe reduced. So by doing this, we're actually enabling a large-scale investment, or we're freeing up capital here in developed countries to developing countries, supporting projects there. And our vision is really that in the next 5 years, we're active in 20 countries and have implemented 1,000 projects, leveraged more than 250 million euro of capital inflow into developing countries into those assets. And the most interesting fact is that every one of those assets is generating savings to the business owners that are 3 times as high as the euro that is invested over the lifetime of the asset. So when we talk about development aid, we often hear the term the revolving dollar, right? The dollar that is generating revenue and can be used again. This is basically what our model is enabling as well, allowing local businesses to have more cash available for job generation, employment of local people, and sustainable growth of the economy. And our claim is make investments, make them matter. And if you want to make an investment and make it matter, then you can go to our crowd investing platform. We have 2 projects live at the moment, one in Ghana and one on the Philippines. And once you're registered, you can actually see all the materials of the project and get a really good understanding of the project financials, the risks involved, and what your returns are for this investment. Thank you.
Thank you, Martin, for a very interesting idea that helps to get going projects that might otherwise fall through the cracks and fail to attract the financing needed to happen. Can I ask, with the gap that you identify, the financing gap, could you explain a little bit about the types of customers that are in that gap? So what's the type of solar equipment that you would use, the size of project in that gap? Thanks.
So the finance gap is between 50,000 euro and around 2.5 million. And for 50,000 euro in a developing country, I can basically build around 20 to 30 kilowatt peak solar system with a small battery backup system. And that is sufficient for your average office building, like a 2 to 4 story office building. And those are some of our clients, just businesses that want to reduce their energy cost for their office. And if we're talking about the large investments, around 2 million, 2.5 million, we get around 2 megawatt, 2.5 megawatt, which is really your large industrial factory, a bottling plant for Coca-Cola or Heineken, or a large cement factory, maybe even needing around 5 megawatt. So really, we're talking really high-profile clients, Unilever, Coca-Cola, Heineken, Heidelberg Cement that was mentioned before, really blue-chip companies that are in need of this solution, because surprisingly to me as well, most of even the really large corporates are working in these countries with operational budgets. So they rarely ever have an investment budget for these kind of assets. So we're providing them with basically a solution that they can pay for out of their operating budget, although after the end of the contract they will get the asset, which is beneficial to them.
I might see if there's any questions or comments in the audience.
Sorry, I came late. Did you say that you were selling the surplus energy into the grid, so you need a net metering policy? Can you work in countries that don't have such a policy?
Yeah, it's a very good question. And typically all our projects work without net metering. So we actually size and design the solar project to be a fully self-consumption system where we only directly have a contract with the business that is benefiting. That has a number of benefits. First of all, my financial model is very secure because it is independent from government subsidies or government programs like net metering. Secondly, I'm much faster in closing deals because I work with a business owner who can save money, and I don't have to deal with a grid operator who's losing revenue. I'm also not having to deal with licensing, permitting, all the things that just traditionally take a long, long time in developing countries just because of their administration being not digitalized and just in general quite slow. And so we always work without net metering in terms of securing the investment for our investors. But we do work with or in markets where net metering is an option. So sometimes we have a staged approach where we finance the first stage, which is purely self-consumption, and then an additional stage, which is based on a net metering. But then we also have to look into the specifics. But it's not mandatory, no.
Do you operate in developing countries outside of Africa? And where did the name of your company come from?
Okay. Yes, we have financed projects in the Philippines and in Chile, and we also are stepping into Southern and Central America right now because market conditions there are really attractive. So basically market conditions for us mean a high cost of electricity for businesses and then low cost of installing a solar solution, and favorable in terms of bringing money to the country and taking returns out of the country, which is always an issue. The name is actually a combination of the terms ecological and economical, and ligo is a Latin word for to combine. So we're combining ecological projects with economic development, because we believe that development in developing countries is only sustainable if it actually is sustainable in the sense of generating savings or profits for the countries or the business in the countries, as well as for the people who provide finance. So we often get asked whether our model is also donor-based or grant-dependent, and it's not. It's purely economical. We make money, our investors make money, and the clients save money. And that's, to us, sustainable development, because then it's a win for everyone and we can scale up to all countries where market conditions allow us to.
Thanks. Just a question. Are they paying you something less than the tariff which they would pay to for their electricity company? But are they paying you in foreign currency? Or what's your PPA? Is it in foreign or local currency?
Okay, so two questions. The first one really depends on how we structure it for the client. Some clients have, especially in the sub-Saharan African context, a very short-term oriented business thinking. So to them, even a 5-year contract is really long-term. So if a client has that attitude, we structure the project for him on a short contract, and then what he pays is more than what he pays for the grid electricity. But after 3 years, he owns the asset and gets all the benefits of it. But in general, we're able to structure these projects so that clients immediately are cash flow positive, saving on every monthly payment they make because we're lower at the grid electricity cost. And the second question is, ideally, we structure it in hard currency, meaning euro or US dollar. But because actually a large share of the operational expense of the project is in local currency, cleaning the panels, checking on the inverters, making sure my system is up and running, driving out to the site, all these kind of things are all paid in local currency. We allow for a mixed payment between hard currency and local currency so that the foreign currency exposure to the local client is not as drastic. But then again, most of the bigger clients actually favor foreign currency because that's how they get their operating budgets in.
Can I ask, as you look to expand into other countries, what do you see as the main barriers to being able to expand?
The main barrier is actually for us as a company to get the funds as a company to grow. Surprisingly, for a lot of investors, specifically in the venture capital area, sustainable business and making profit is not combinable, which is a surprise because it is. And a lot of businesses have proven so. But that is really the main barrier. Now, second to that, I would say, is the different market regulations. Basically, every country has a different set of licenses you need, different regulation to follow, different procedures, how to register. In some countries, you need to have a local business to operate. Some countries you don't. So for us, every country we enter is a high expense once off to become active in. Once we're set up in a country, actually it's, the project structuring then is always the same. Yeah.
So how successful have you been in the crowdsourcing of finance?
So we have financed 6 projects to date, raising around 650,000 euro. There's 2 campaigns running at the moment. As I said, on average, an investor invests around 2,500 euro in a project, and our investors, 85% of them are recurring investors, so they invest in every project that we publish. To us, that is a proof that they believe in the project and the way we're setting them up, as well as them understanding the risks involved. Of course, to us, it's most important to scale this community, to really grow in crowd investors, because we have around 1,000 people registered right now, which is not that many. Other platforms have 30, 40,000 registered users. And to be able to tackle more projects at the same time, we also need to get more investors on crowd. But to date, we finance projects typically within a 2-week period, which, if you also look at how long it can take with a bank to raise the finance, is a rather fast approach. Yeah.
Well, yep.
So what is the proportion of, in terms of your clients, so the projects, the big players, so Unilevers and others, and more sort of smaller, medium scale players?
It's a good question. I think right now, because we're only active with our platform to finance projects since a year, and our company is only 2 years old, we have done more the smaller scale projects. So anything between 20 kilowatt to around 200 is the space we're in right now. But we see in the markets that a solar project as a reference in a country is the key enabler. Once we're able to showcase clients a working system that was financed by our platform, that we operate and maintain, we see a much faster process in terms of closing deals. So we're really close to closing some deals around 500 kilowatt to a megawatt. And I think that's also the scale. Like, the big players right now are all in a waiting position a bit, seeing if it works, and then they will make the move on their side. But there is activities. I mean, the big players, Heineken, Coca-Cola, all of them are setting up programs to basically make their local manufacturing CO2 neutral. So it will definitely happen. Whether we will win the contract, that's a different question, but yeah.
If I may.
Of course.
Can you tell us about your customer acquisition process? Like, do you go to them? How do you get these local deals? The smaller one the gentleman was asking about.
It's also a very good question, because that's also, I think, what for German business, for us, is what makes us unique to many other companies, because we believe in the local presence very much. So one of the first things that we did was actually setting up local entities and getting local sales managers in the countries that we are active in. And the sales, you can really think of a classical B2B sales. It's really addressing businesses that are high profile in the sense of they probably need a lot of energy, and they probably are in a position to afford the monthly payments, as well maybe having a beneficial or additional benefit in terms of becoming green, in terms of their local marketing and so on. But it's really a typical B2B salesman approach, listing all the companies, calling them up, going there, being in the market, going to the trade shows, the conferences, being member of the local renewable energy agencies, the business organizations, and so on. And so every market we go into, first thing we do is set up shop, get an office, get a local guy, and let him run around. Yeah.
Do you find people telling you that they would rather wait till next year when the cost of solar is going to go down lower? Do you hear that at all?
No, actually not. What is more a decision driver is whether or not the government elections were just over or just coming, because most business people know that governments typically promise to reduce cost of energy, and then shortly after elections, we see that in all the markets, they implement a 10-15% cost reduction, and then half a year later, the utility actually says, oh, we're not making any money, we increase now by 20% again. But that is more the decision driver. So people around election time, things stall for like half a year or so. Yeah.
Right, if there's no more questions, that actually brings our time to a close on what is a very interesting proposal and a very promising business model. So thank you, Martin from EcoLigo.
Thank you as well. Thank you, everyone.